Well, welcome everyone. I'm absolutely delighted that you're able to make it here for one of our exciting live events on the Grove. And we will be recording this today, so if you need to go back and review it later, the presentation will and the recording will be posted on the Grove. So I want to welcome Sunshine Chapman from ERC Provider, and our webinar today is "Don't Fear the A Word: How to Get ERC Filings Ready for an Audit." So Sunshine, let's go ahead and pass it over to you. I know you've got quite a bit of content today, but
Yes,
the overall message is, if you're prepared, you don't have to fear an
exactly.
IRS notification.
Exactly. That's right. And so my name is Sunshine Chapman. I'm the president of ERC Provider. We've done a webinar before with Liscio about the different ways to qualify for the ERC. And so we keep our finger on the pulse of this. We have done with our partners over $5 billion in ERC filings for over 30,000 companies. So we have seen it all, and we are on, daily talking with business owners and helping them get qualified. As we have expected, the IRS has begun some IDRs, basically information document requests around the ERC. So our message to you today is to be ready now and talk to your clients and kind of giving you some guidelines on what you want to advise them to keep on hand. So some of the things that they'll want to have to begin this file for their ERC claim. So first of all, of course, we want to talk about what exactly is the ERC. Most people know this already, but it is the Employee Retention Credit, meant to help businesses who had employees during the pandemic. Part of the CARES Act. The other two pieces are already gone, the PPP and EIDL, but this one is still available for retroactive claiming up until latest we've heard is April 15th, 2025. So there's still a lot of time for people to go back and claim this. And we're estimating probably around half of businesses that are eligible have probably already gotten onto this, and we've been able to help many of them. But there's still many who haven't. And so if your clients have are thinking about claiming the ERC or have already, our advice is to make a file and keep all your documents just like you would with any other thing that you file, right? Just like you keep receipts for other business expenses and things. So
Sunshine, I just have a quick clarification. Is it 2025? That
yes,
April
yes,
15th, 2025 is the last date to file
yes.
retroactively.
Yeah, and that was
Okay,
the last date for the year 2021. It's because it's 3 years from the original due date of the
got it.
2021 quarterly tax returns.
Great. I
So
just was, my ear just perked up and I thought, gosh, that's good. That's really
yeah,
good to know.
there's
Yep.
a lot of time, right? And that's why we were very actively building relationships with CPAs and tax preparers for this, because 86% of my company's business comes from CPAs and other finance professionals who send their clients to us. So that's if it was about to end and we were all going to be done, we would move on. But there's still quite a bit of time, both for people to get their ducks in a row who've already done it and those who are about to make sure they're doing it correctly. So kind of talking about some of the compliance things that are coming up as we move through this process. I've been doing it for about 1.5 years already. So we have our first poll here, and that is, have any of your clients received ERC credits? 1 is yes, I helped them file. 2 is they used an ERC service provider. 3 is no, and 4 is I don't know. So Allison,
All right. Well, we actually did not get the polls loaded. So what we're going to do is we're going to have you go ahead and let us know in the chat.
Okay. Sounds
So
great.
yes, I helped them file. 2, yes, they used an ERC service provider. 3, no, and 4, I don't know.
All right.
So it looks like, and I apologize, Sunshine, for the polls not being loaded. I didn't get them in time. So everyone, okay, it looks like we're 1s or 2s. If you go back, Sunshine, if you wouldn't mind. So 1s or 2s seem to be the majority.
Okay.
And I've had a couple of 3s come in.
Okay.
Yep.
Yeah. Great. Yeah, we're seeing kind of on the bell curve where it's becoming much more, people are much more aware of this than they were before. So one of the things that has been coming up since there was an IRS notice in October warning people against untrustworthy vendors who are overqualifying people, who are not advising them properly, and who are possibly, just kind of blanket qualifying people without looking into their actual qualifications. There's been a lot of talk about what constitutes a trustworthy vendor. So if someone is telling you, I found this great person who's doing this for me, these are some questions you might want to ask your clients, and to see what they kind of vet out people that you may be speaking to about helping you with ERC. So first, of course, properly factoring the eligibility. So that includes a lot of things, both the payroll information and their eligibility factors that we'll get into later. Following the IRS notices and revenue procedures. Excluding PPP wages is a huge one. Some vendors do not even ask about that, and that's not a good idea because you cannot double dip, and those wages need to be excluded. It's not that you can't get the ERC, but you can't use the same wages for both. And able to appear before the IRS, which that would mean that there would be an enrolled agent on the team. And retaining documentation supporting the credit. So you want to know that they're going to, have a file and have information on hand if there's questions in the future. And also, one of the biggest things the IRS called out in their memo was that a lot of these vendors are not informing clients of the requirements to amend their tax returns. So the ERC, this is also something in my company, we always refer people to their CPAs. So we don't ever give them this advice. We tell them to talk to your CPA about this. You need to make sure that they are aware that you've done this. And typically, for most companies, they are going to need to amend their income tax returns to reduce the wage expense for that period. But that's something that the CPA, we refer them to their CPA to tell them that. So, but it is something that needs to be brought to light for clients. So as expected, many people who have filed have started to get these IDRs. And so this is the time now to be prepared and to start making a file for your clients who have or are thinking about doing the ERC. Because, what if 5 years from now, the statute of limitations on this is 5 years from the date of filing. So what if the person who did it is not there anymore at the company? Or what if nobody remembers what happened way back in 2020? You want to have this all in writing so that anybody in the company is able to pull this information and know what was used to calculate this credit. So that's our advice today, and we'll kind of give you some specifics on what are some of the biggest points that are being asked about, and also what types of things we believe that you should include in these files with your clients. So when you're asking about their filings themselves, they want to know if the effect on the business was more than nominal, if there was a government order that limited the commerce, so that it has to be, to have a partial shutdown, it needs to be based on a government order that limited either commerce, travel, or group meetings. So there were so many government orders that very many municipalities, cities, and states across the country were included under these. It can't be a recommendation. It needs to be a government order. The effect needs to be more than 10%, so more than nominal. And if it was just a simple company that, okay, we used to write blog posts in our office and then it shut down and we had to go home and write our blog posts, like that kind of thing is not going to qualify. If you could just easily do your work based on telework and not have to go into an office, and even if the office was closed, that would not qualify. So that's one of the biggest questions that are being asked when you're looking at these qualifications. The biggest focus right now is eligibility. So very basically, obviously, they want to know that they did have employees, that they did pay payroll taxes, they did file their original 941s, that the amount of paid tax that was originally paid matches up with what's on the revised 941s. So that's just the basic financial part of it. And then the impact of the pandemic on their business is the part that we're going to dig deeper into on how to substantiate that in these files. So the IRS states in their most recent announcement on October 19th about the ERC, that indeed, if the business filed an income tax return deducting qualified wages before filing the ERC and claiming the credit, they do need to file an amended income tax return to correct any overstated wage deduction. So number one, if you find out that a client has filed and it claims an ERC, you need to ask them to see that and make sure that they do file amended returns. So they're going to be bouncing back to you as a CPA or a tax preparer for assistance with this, and we don't want them to miss this important step. So we advise, of course, to start preparing now, be proactive, and get the files in order so that you feel very confident that you have the information that you need on why the credit was claimed. So some of the things that the IRS is asking for, and this is coming from several law firms that work deeply in this program and have seen a lot of these, list of employees and owners. So a lot of this stuff, for example, in our company, we ask them for this when they file. So we're not just blanket, throwing things up on the wall. We are actually asking them for this information. So whatever information they have that they've provided to their ERC provider needs to be, you need to put it in their file. So list of employees and owners, payroll journals, payroll logs. You need to make sure you have the gross wages for the entire periods from March 2020 through September 2021. Any related parties with an interest in the business, because as you probably have heard, owners and their relatives, their wages are not included in the calculation. The previous filed tax forms, such as the original 941s, any notices that they received for suspension of operations during the period of eligibility, and then their gross receipts for 2019, 2020, and 2021. That's especially important if they use the revenue reduction qualifier for this. And of course, they need to have their PPP application and forgiveness information. So the amount received and the date of forgiveness and the period that they chose, whether it was 8 or 24 weeks for forgiveness, because that's the period of wages that will not be included in the ERC. So some of this supporting documentation are the things that we've been seeing in IDRs so far. So some of the hot button issues that have been called out about for people who aren't doing this correctly is if you don't ask about the owner and relative wages, you're already completely messed up in your claim, because you need to know if the owner and any relatives are employed by the company, and if they're on those payroll journals, their wages need to be pulled out and not included. And the line for this is anybody who owns 51% or more of the business, and people who are related to them. And it's a very broad thing, like cousin, grandma, uncle, child, spouse, in-laws. They're pretty broad on the relatives. So we have to dig deep on that when we're interviewing clients. And on the same note, when it comes to employer size, the aggregation rules are extremely complex. And this is why people usually want to use a third-party vendor for this, because it is quite a lot of things to know on this front. But the summary of this part is that if multiple businesses are owned by the same ownership, then all the entities in the groups are deemed a single employer and aggregated they need to file together for ERC purposes. So that we create separate filings for each EIN, but we do put them all in together. And they also, in the IRS notices about this, they say that if one of them is eligible, then all of them are, because they're all considered one employer. The reason you get into danger with that is because if one person or ownership group owns many different companies and their total number of employees is over 500, then they are over the limit for this and won't be eligible. So we always ask people, you own this company, you have 200 employees, what other companies do you also own? Making sure that they don't go over that 500 number. And the number is not based, it's all very strange, because for 2020, they need to have under 100 employees in 2019. For 2021, they need to have under 500 employees as counted in 2019. So this is the calculation you use to determine the number of employees. It's an average. It's different than other IRS credits, and this is the specific way of calculating that. So if someone is kind of close to that, this is where this would come into play. If they were getting close to the 500 number, you need to make sure using this calculation that they're not over that based on 30 hours a week per month. Yes, in the total month. So additionally, this is another huge one, as I've noted, PPP must be accounted for. The IRS can request to see the allocation between ERC and PPP funds, which will be done by the ERC service provider when they are calculating the credit. So you cannot take both the ERC and the PPP on the same wages. So sometimes, depending on how much people are paid, PPP makes a huge difference, and sometimes it makes less of a difference. But it needs, if they got that, that's going to be an immediate red flag if it's not noted in the calculation. So of course, we recommend that you make a folder. This is now whenever we interview people and help them determine if they qualify, we tell them right now, open up a folder, whether it's on your computer or in your drawer, however you prefer, and make sure that you have these things on hand. So some of the things that the IRS specifically called out in their notice that need to be in there. This is an IRS notice 2021-20 under Q&A 70. So the next two slides are taken directly from that. List of employees and owners, payroll logs, government orders to suspend, list of related parties, previous tax forms, gross receipts, PPP, and the calculation. Plus, any government order to suspend, so if they've received one of those. If some ERC providers are also using healthcare expenses in the calculation, so if those were included, you need to have the backup for that. Documentation on the aggregation, so if they were getting up, if they own multiple companies, what are the employee numbers in each of those? The Form 7200 is the way that people would claim this in advance. So back during the pandemic, you could use Form 7200 to claim the ERC in real time. If that happens, that form also needs to be included. And then copies of the original and revised 941 forms. So that's the basics that the IRS in their notice has told people to keep on hand. But we're going to go a little deeper because the shutdown impacts are not, there's so many different types of shutdown impacts. And we want to give you some ideas of how to keep substantiation on those. So here's another poll. Have you filed an ERC claim using full or partial shutdown as the reason rather than revenue reduction? So this is an easy yes or no question. So Allison, let's see how this one comes out. So we're getting a lot of answers.
Yeah, we are, it looks like it's sort of a mix. There's people who have and haven't.
Mhm.
So, and what I'm going to try to do, Sunshine, is set up the last poll so that, if people want information from you, we can collect that. So I'm going to go ahead and set that up behind the scenes.
Great.
But the informal is number one.
Okay.
So it looks like most folks have,
Good.
which is good. They're, basically pretty, it looks like folks are aware of the reasons that they can do it for.
Great. So that's what we're going to dig a little further into, because they want to know the answer to this question is, did the government orders interrupt business in a more than nominal or more than 10% way? And this doesn't have to be that one thing interrupted it in more than 10%, but overall, all the partial shutdown impacts did add up to more than 10%. So we have some really large institutional clients that we've worked with that have just created a massive spreadsheet of everything they did in 2019, 2020, and 2021 in order to put numbers to, numbers of appointments, numbers of visits, numbers of people served, how many people came in here and did this, receipts, all those types of things that prove changes. So you can get as into detail as you're able to, but here's some of the ways to what needs to be, what we're trying to substantiate here is the suspension of business operations. They have to demonstrate that a government order interrupted at least a portion of the business, that this is for the partial shutdown, but the complete shutdown was not required. It has to have been more than a recommendation. So it can't just be like the CDC recommends mask wearing, which that was like applied to everybody. It needs to be something that was more, the state of Florida says that all bars must be closed, which happened to some of my clients at that time. So that was something that, early on, these type of orders occurred. And in certain states, these orders continued even through this year. So it has to have been more than just a recommendation, and it has to have negatively impacted in a more than nominal way. So the different types of shutdown impacts that we see most often are supply chain disruptions, reduction in hours, reduction in capacity, reduction in services offered, and travel restrictions. So I'm going to give you some examples from what we've talked with clients about, what they've come up with that they want to use to substantiate this for some of these different ones. So supply chain disruptions, they need to be based on a government order and have had more than a nominal effect. And it needs to have been that they couldn't get a reasonable replacement. So it can't be just like, I used to buy this at Amazon, then I bought the same exact thing on Walmart and it was fine. It needs to be, something that had a real impact on their business. We do a lot with transportation, and a lot of these trucking companies, they could not get tires, they could not get transmissions, they couldn't get actual trucks. So they were unable to get new trucks, and they had to like retrofit old junky trucks to make their work happen. They couldn't get uniforms that were required by their business partners. They couldn't get things like rear view cameras or, replacement mirrors. There's just a number of things that have been delayed, a lot of it because of the shutdowns in Detroit and Michigan in the auto industry. So what we ask people to put down for this is save your emails where this is what I ordered. This is the email back I got that said not available, or that said, oh, it's delayed now and it's going to take 5 months to come. And then the shipment notification emails that say, okay, this is when we got it. Or just records of, okay, in 2019, we ordered this many of this thing from this company. In 2020, that was not possible. So this is where we did order it, and this is how long it took to arrive, or the type of delay or increased cost that occurred, even if they didn't buy it, because it was obvious. Sometimes it was like this thing was $10 and then it was $500. So just showing that they didn't purchase it because it was prohibitive at that time. So you want to just show what it was they couldn't get and some kind of proof about the fact that they couldn't get that thing. Even like used car dealerships, they were not able to get used cars. So they, due to them, a lot of the delays in computers from Detroit and other places where they're making the computers used in cars, it became delayed. So they would just show what happened, what they couldn't get. Reduction in hours, pretty simple. You just would want to say, in 2019, our store was open from 9 to 10, 9 a.m. to 10 p.m. Due to government orders, we were forced to shut down at 5 p.m. And that they'll just have a record of this is how long we were open. So just write it down. Basically, there'll probably be things like Facebook or Instagram posts to announce the reduction in hours. That would be one way to prove it. So anything that has written proof that you did reduce your hours. Reduction in capacity, that's those signs we see on all these retail stores that some of them still have up, which only 6 people allowed inside at one time due to social distancing orders. They basically, a lot of companies, most companies are aware of how many legal people they were legally allowed to have according to fire code prior to the pandemic. So the store at the mall used to be able to have 50 people. Now they could only have 10 throughout those last 2 years. That obviously severely limits the number of sales they can make, as we've all seen by those long lines of people waiting to get into stores because they're counting the number of people inside. So that would just be something that would be written down. Prior to, we had this many, during, we had this many, and pictures of signs or things like that that show that change. Reduction in services offered. So this is very broad, but some easy examples of this would be a doctor who used to perform elective surgeries. Those were all canceled and due to government orders that were trying to make more space in the hospitals. So they used to offer this service. This service could no longer be offered. One way of showing that, of course, would be receipts. It could be calendar appointments where, okay, we did this many double bypasses in 2019, and in 2020 we only did 1/10 of those. That would be one way of showing that. It could even be with something like a tech company that used to go and do in-person demos and get paid to demonstrate their capabilities, or in-person promotions where they would launch new client initiatives where they couldn't do those anymore. That would be a reduction in services offered because the office was closed. Another very broad one is travel restrictions. This one applies to Allison and me. We met at a trade show way back in last year, early May of this year. And, these businesses we go to trade shows to meet new clients, to sell our products, to make connections, and to make deals, right? And that's how you meet people and get things done. Those things were canceled.
You could not do that in 2020.
Yeah, so we were all trying to scramble and find some new way of making sales. And a lot of times it worked great, right? A lot of people still ended up booming and finding new ways to reach their clients. But pretty much anybody at a trade show can qualify for this because they used to go to these things and then they couldn't. So it could be even things like you used to go to someone who worked in like medical, they used to go to the hospital to find out patients that they could transfer to their care facility. They weren't allowed to go there, so they had no way of finding out who they could be bringing in. So anything that involves in-person travel is covered under that. So just obviously have, in 2019, we did 20 trade shows. In 2020, we did 0 trade shows. 2021, we did 3. And that's anything that's a reduction will qualify. Allison, did you have anything else? Or just popping in to say, yay, trade
I was just popping in to talk about trade shows because it really did affect. I mean,
Yeah.
there were a lot of people that had in person, they had their whole marketing or their expansion, planned on going out to events.
Yeah.
And live events were canceled. Yeah.
Exactly. That's where you meet people, and even just local events like Chamber of Commerce meetups and things where people would go, and that's how so many businesses grow that way, and they couldn't. So there's only so many emails and texts you can send to try to make up for that.
Or restaurants that suddenly had to just take out only.
Yeah, that would be the reduction in services offered for sure.
That's a really good one.
Restaurants and hotels, are some of the easiest ones under this.
Yeah, travel and hotel was, as you said, the easiest ones, weren't they? But there were other ones that the last webinar that you had that were kind of surprising.
Yeah, we try to, that's why we use kind of weird examples, not the most obvious ones, just to show like there's a lot of, if you dig in and you ask people these questions, you find a lot of reasons. And so now we're just trying to make sure that they wrote those reasons down somewhere and they have them in this file. So that's as a advisor, we want to make sure everyone's helping with that. So in order to substantiate the shutdown impacts in the IRS notice, they say, they don't tell you what it is, right? They say it's any records the employer relied upon to determine whether more than a nominal portion of the operations were suspended due to government order, and that it had a more than nominal effect on its business operations. So they don't tell us what we need to keep for this. That's why it's up to us to determine how did the employer rely upon, what did they rely upon to come to this conclusion, and to help them write that down. So obviously the local government orders, the actions they took. So they told us we had to close our bar on March 17th. I remember that day, 2020, the bar was closed. Everything had to stop. I know the weddings were canceled. The events that were going to happen were no longer happening for our wonderful 2 weeks to stop the spread. We all thought it was like, oh, we'll just do it in a couple weeks. But then it lasted for years. So the actions that were taken, like I've mentioned before, records of appointments are very important. Things that you used to, just your calendar, your calendar of your business. What happened in 2019? What happened in the next 2 years? By looking at those, you can see and substantiate the changes. Emails of order dates, and then sales details. Something that people get into a mess with on this is it is not tied, doesn't have to be tied to revenue. It can't be that, it doesn't have to be that you made less money. It just has to be a change in operations, and details of sales and receipts can show that. Like you can show that, okay, in 2020 and 2021, I sold 100 webinars that people bought. But in 2019, I sold 10 in-person conferences. And so maybe the money came out to be the same, but it still would be an operational change because they had to adjust they reduced their services offered. So a lot of like public speakers who used to get paid to do big keynotes, they would get paid $100,000 to do that. Now they're doing a webinar or a virtual keynote and getting paid much less, but maybe they made more money, but it still was a big change in their operations, and definitely impacts things like profits and ability to get more business. So those are some things to keep. One thing to remember is we've been talking about all this scary stuff, right? All these things that you don't want to get in trouble. So you need to make sure you have your ducks in a row and keep your documentation. But this isn't some thing that we're trying to put over on the IRS. This is something that they have encouraged people to use. It says they're changed it. They've designed to make it easier for businesses, and they urge employers to take advantage of it. So this is something that they were ordered to do as part of the CARES Act, and they administer this program, and they encourage businesses to claim this. So it's even some government contractors are required to take this before they can file their annual reports with the government. It's something that is a normal thing that some people did during the pandemic, and some people who didn't now are going back and retroactively claiming it. And that's what my business does. ERC provider. We are trustworthy. We do this a very clean shop. We have done with our partners over $5 billion in this credit for tens of thousands of companies. And the biggest difference between us and other people is that we have personal service. So each business owner is paired with a person, and most of our facilitators, as you see here, are actually paired with a team of CPAs, with various CPAs across the country who talk to them, help their clients together, send their clients to them, and help them get qualified. And then we track and we reward those partners by sharing some of our revenue from those opportunities that they send our way. So that's why 86% of our business is based on these relationships, because we maintain close personal relationships with the finance professionals and with their clients, so that we can help them get them qualified safely and in a very clean and organized process, with trust that you've done things correctly, because that's what we really want. So we have partnered with Liscio to do these webinars because how important it is to keep the process secure. There's a lot of document exchange going on in this. So Allison is going to speak to that in a moment, but there's, you're going to be requesting things from your clients, and they're going to be sending them to you, and there's something that can help with that.
Yeah, just super quick. This isn't a webinar about Liscio, but we were excited to partner with the ERC provider because not only of the service that they offer, but also the opportunity to help folks like you out there to keep everything secure and simple. And so just in a nutshell, if you don't use Liscio, it's a secure app that you're going to give to your clients. And if they need to upload a document, they will, just like on your banking app, they will use their phone, snap, send, and your team has full visibility. There's many more options and features in there, including integrated e-sign. If those of you who are doing tax, there's your e-signatures for your 8879s, or with your KBAs embedded in there. There's just a ton of things, but it is important as you're sending these documentations back and forth. It's payroll information predominantly. And you've got to make sure that you do have a secure process for that. And the other thing is, because there's a lot of paperwork, you want to make sure that you do make it very, very simple for your clients. So if any of you would like to, have a demo of Liscio, it's just super simple. Go to liscio.me. So just liscio.me, which stands for Delight Me, and you can set up a demo. Yeah. So, Sunshine, should we do questions at this point, or do you have any more slides?
Yes, absolutely. I just have a simple, do you want to know more kind of slide, but that's about it.
Yeah, and I do actually go ahead and I simplified the poll. We'll go ahead and launch the poll now.
Okay.
Let's go ahead. I just basically said, would you like more information from ERC provider? And folks should be able to fill this all in, and you can connect with Sunshine afterwards. We will be sending out the recording and the PDF of the PowerPoint deck. And those of you that have not joined the Grove, we'll talk about that in just a second. That's our community where you can actually connect with Sunshine and ask her questions directly. So we'll just wait a couple more minutes. We've got a few more people to chime in here. It's just simple yes or no. Very, very simple poll here. And then we're happy to take your questions. So if you want to type in any questions into the Q&A, we would be delighted to answer them for you.
Allison, did you want to read them to me, or do you want me to look at them, or what do you prefer?
Right now, no one has put in any questions, so we're going to go ahead and just give folks a moment to put in the questions that they have. It may be that you just covered things so well, Sunshine. They're like, okay, I got it.
I know last time a lot of people had to noodle on it a little bit, and they emailed me questions later because they were like, oh, I got this one client, and they don't necessarily want to do it publicly, but we were happy to help with all that kind of stuff too. Should I put my email in there too, or I guess you're going to send it to them after?
Yeah, we're gonna go ahead and send it out afterwards. So why don't you go ahead and stop sharing, and we can go ahead and just open it up for Q&A, folks. If anyone has any questions, pop it in. You can put it in the chat or you can put it in the Q&A. Okay, so we have David asking, how long until they stop taking ERC applications?
So what we have heard is April 15th, 2025. So that's based on the 2021 941s, the official due date for them, even though they were submitted quarterly, the due date was April 15th, 2022. So 3 years from that is 2025. So 2020 will expire April 15th, 2024. 2021, which most of the credits, they're much larger. They're 7,000 per quarter per employee at maximum.
That's a pretty hefty credit.
Yeah. So even if some people don't get it, aren't able to get the 2020, they're going to get so much more from 2021 that it's still worth continuing to help them out through April 15th, 2025. So we have a couple more years.
Yeah. And Sunshine, while we're waiting for other people to put in, are there any sort of red flags that you've come across where people should just really be quite, like, if their client is saying, well, I have to do it this way, or is there anything where you've just sort of said flat out, no, that's going to be a red flag?
Yes, a lot of people, well, this is an obvious one, but they don't pay people using W-2s and 941s, and they want to pretend like they did. So they want to go back and like, oh, I'm just going to file a bunch of 941s for the last 2 years and then have you amend them. And it's like, no, we want you to have actually filed and paid. You can't get a refund on something you didn't pay. Right. So the only ones that we've had
to me, that sounds like fraud, but I don't know. I don't know. Maybe that's too strong of a word.
Yeah, that has happened. There's been people who have actually, and we've turned in, I think, 500 businesses to the FBI because they have doctored fake 941s and turned them in. So you can't, there was some room for fudging that has obviously been caught for PPP, where people were like, made up things, and it was a little easier. But with this one, you cannot get a refund on something you didn't pay. So there's
because
no
it's the employee retention credit, and the whole idea is they've got to be an employee and they've got to be on your payroll.
Right. Yeah. They have to have actually filed and paid the taxes in the first place. And then the other thing is just if they really didn't have any, that's why we interview people very deeply to find out if they really just didn't have any problem and everything was just fine, then they would not qualify. So we ask people to kind of give us the chance to really dig in with them, and we say no a lot. When it's just you were fine, congratulations. Then they're not.
You did really well. Your business survived and thrived. Yeah. So it was designed for people that really really went that extra mile to keep their employees retained, even though they were taking the hit.
Yeah, we've had a lot of people who were paying with their credit cards, their payroll for all these years. Like we even had a doctor, she was an ophthalmologist, and they canceled her surgeries because of the hospital closure. And so her most lucrative thing was not happening all this time. And she just kept paying with credit cards. And when she got this, she was like, great, I can finally pay off the credit card bill I was using to pay my employees. So that's what makes us the most happy, when people have actually really suffered. And it doesn't have to be that you've lost revenue necessarily, but that you had all these different things resulted in a profit cut for a lot of people because of all the different,
or the inability to grow. Yeah. David again, which is great. Thank you, David. Is the ERC credit once received considered taxable income, or applicable wage is no longer deductible on the tax return?
Exactly. It's number 2. So it is not considered taxable income, but it is that they have to reduce the deduction up for wages in those 2 years on their business tax returns. So another thing we get a lot is if I haven't filed my returns yet for 2021, because for various reasons, some people are in Florida, we were allowed, we have till February because of all the hurricanes. So they, if for some reason someone hasn't finished it, that does not affect this, because this is just about the 941 payroll tax returns.
Right.
So
and you do have to file those amended ones, right? Which then of course are going to roll up to your corporate tax returns. That's where you have to amend that too, right?
Yeah.
So there's a bunch of amendments involved.
Yeah. These are just those quarterly tax return amendments. So it's happening.
Yeah. Okay. Reduce the wages by the total wage used, or just reduce for the amount of the credit itself?
By the amount of the credit itself. And that's yes, that's what we understand, but we also tell people to go to their CPA and ask them, so because we want there are
David, are you a CPA? You tell us. No, I'm kidding. I'm joking. I'm not a CPA, so I would not be the person advising here.
And in the cases of certain types of businesses, based on how they credit things different types of accounting they use, and also nonprofits. There are different caveats to that, but the biggest message is that you don't just run with this money and not tell your tax preparer about it. You need to tell them, and then they will dig in and find out what applies to your specific situation.
I wonder how many people are actually going to do that out of just ignorance, or, I mean, just innocence, right?
Yeah.
Yeah.
On the interest on the refund, that if there's I guess wherever you would normally claim IRS interest that you received on a refund from the IRS, you would put that in the same place. So
yeah, should we include that in 2022 though, I think was the question Kuyen was asking. The question was, how about the interest on the refund? Should we include that in 2022? So it's a good question. When did you receive it? I don't know. Yeah.
Because yeah, it's kind of like there's also, based on these accounting methods, whether it's accrual or cash basis, that makes a difference. So I'm not going to make a statement on this because I'm not entirely sure, but I would say to research that further, based on exactly what your business is using.
Yeah. Now Angel's asking, is it okay to allocate, let me just read it out actually, because this will be on the recording. Is it okay to allocate PPP forgiveness to owner payments so that I can allocate more employee wages to the ERC eligible amount? That's a great question, Angel.
Well, there are certain ways that you can allocate the PPP forgiveness if you haven't already done it. So I'm not sure if they can go back and amend the way that they did it, but if they haven't already claimed PPP forgiveness, yes, some businesses apply it to things like rent that were allowable and other things that were allowable under that rather than wages. And that is something that can be done. It would just depend on obviously the individual circumstances, but yes. That's
so again, another question for the tax preparer, for the CPA or the EA who's doing the tax return, right?
Yes. Yeah.
Some of this is very interesting. It's a very interesting. Some of it is quite. It feels like it's quite strategic.
It is. There was a lot of when it actually started, when COVID started, I own a marketing agency, and at that time I had a client that said, "Oh, I would like to pay you as a W-2 instead of as a 1099 in order to do work for me, so that I can get the ERC." That's the first time I ever heard of it, because it was way back, March 2020, and that it was something that you could do. You could just say, "Okay, I'm going to pay everybody W-2 now because I want to get the ERC on this," rather than 1099. But you can't so much go back and do that.
You can't go backwards, but if you did do that intentionally from the beginning, I mean, think about that. You would be paying the payroll taxes on it. So it's like, yeah. David's saying, I suspect many companies have double dipped on the wages for PPP and ERC. What are your thoughts on how that will play with the IRS?
Well, they're definitely saying they don't like it, and it's something that they're going to
be watching for, right?
Yeah, they'll very easily be. That's the immediate and easy red flag issue to say, well, yes, you didn't do this right. This is going to have to be adjusted and changed. And that's why, any of these reputable firms who are doing these, one of the first things we ask is, did you get PPP? And then we immediately ask for that documentation. So to eliminate that, that's not something, I mean, since we've been doing this from the very beginning, because at first you couldn't get both. And then in the beginning of 2021, they made it so you could get both. And that's why it became possible for these companies.
But then people had already done something. So then understanding what they had done was really important.
Yeah, exactly. So it's, so that would obviously be something that would not be good. So I can't say what they're going to do about it. I don't know.
But having it documented how you did it is super important. That file is going to be really, really important. So let's go ahead and sum up, Sunshine. What are your final sort of tips for everybody about the types of things they need in that file, what they need to do? Like, what are the next steps? Obviously, connecting with you sounds like a great step. Making sure that when you are transmitting all that information, that you are using something super secure like Liscio, where it's encrypted at rest and in transit, making it easy for your clients. So there's all those sorts of tips, but what are the main things that you'd like people to take away from this webinar, other than to get in touch with you?
So I would like to, my biggest motivator for this was to kind of take away the fear that a lot of CPAs have when they hear all this negativity around ERC, and to realize that it isn't that you need to panic and say, no, don't do it, or that you need to run away or tell your people they're going to go to jail. It's that
run away.
Like anything else you do, just like anything, right? Anything you do, I give my accountant my my numbers and he does my taxes, but it's still my job to keep my receipts, right? It's still, I have to keep a record of how much money I made and what the proof of everything I've done. So just like that, I would recommend speaking with your clients and saying, have you done this? Doing a message to them and saying, have you done this? If so, here's some suggestions of what I suggest that you keep on file. If you need help with this, let me know. That's just a simple, due diligence type of thing that is a touch point to show that you care for them. And then, of course, if they haven't done it yet, you want to have it done by someone who does keep these things on record and does advise people to do this correctly, and that will do it,
and it'd be fully documented.
Right. Yeah. A documented and trustworthy job, and a company that's going to stand behind their work. And that's why we hope you
right. So. Well, I want to thank you, Sunshine. I knew we'd have great questions. It's always fun to talk with you. I guess we'll take one more question and then we're going to end it. So David's asking, is there a minimum threshold of payroll / ERC by client for which you would not be interested in taking on?
We will take anybody. So many of the other firms will start with at least 10 employees, just because it's the same amount of work, however many they have. But we want to help everyone. So we will do it even with, it has to be one that's not related to the owner. However, and we often advise people that if you really only have like one part-timer not related to you, the amount of money is not going to be that great. And the amount of, they're going to have to pay their CPA to go back and their taxes. So they're going to get like $1,000. It's not really that much worth it. So
I'm going to pay $900 to do it that well, maybe. Yeah. I don't know. Yeah.
So, but we always will say yes, and we'll do the analysis, and it's all free. There's no upfront cost or obligation to find out what the amount is they can get. So, but yes, we don't have a minimum.
Yeah, and I think for what I've heard, Sunshine, is one of the biggest benefits of working with a company like yours is, first of all, you dot the I's and and cross the T's and make sure everything's very legal. However, that interview process where you guys ask, the questions to ask, and you uncover things that people wouldn't have thought of. Oh yeah, I did have to reduce my hours. Oh yeah, we did have to change what we were doing. Or yeah, there was a period of time when we were actually shut down, right? And then having it, and then being able to document it so that it's not a fearful thing, but you've got this file all together and boop,
Yes.
Great. All right. Well, listen, folks, I'm going to go ahead and end it now. But I hope this was useful for you. This is a series of educational webinars that have really very little to do with Liscio, but are very, very useful to the folks that use Liscio or should be using Liscio. And if you'd like to join the community and you have not already, it's super simple. It's thegrove.thinkific.com. And we will share that in the email, and that you'll be able to see more webinars like this. So thank you, everybody. Thank you, Angel. We're glad you enjoyed it. And thank you for showing up, everyone. And we really appreciate it. Thank you, Sunshine.
Thank you, Allison.
Bye.
Bye.